Hey, this is John Starks. We down here on the street and you watching Taking Stock.
Counting down to the close, today is Wednesday, February 25th. This is Taking Stock and I'm Remy Blair. Well, the major U.S. stock averages in today's trading session are in the green and we are looking at positive territory ahead of the market close. Now, as we count down to NVIDIA earnings, keep in mind that software stocks have recovered in today's session, and after the bell, we'll be monitoring the action in NVIDIA. And the State of the Union address was the longest on record. President Trump declaring a golden era for American productivity, while he doubled down on his plan for tariffs, vowing to protect American workers while slashing federal red tape. And we're now moments away from one of the main events of the week, that is earnings for NVIDIA. And this is the global bellwether for the AI revolution. Now, shares advancing in midweek trade, up over 4% year to date, but still the stock is down more than 6% from its October record high. Even though NVIDIA has not missed Wall Street expectations in terms of earnings, they tend to make sharp moves in after-hours trade. And today on Taking Stock, we'll be joined by Joe Hilston of Nassau Street Partners, and we are counting down to the closing bell, so take a look at the footage. And that was the closing bell, so let's take a look at the tail of the tape. You have the S&P 500 closing in positive territory, up by 0.8% on the session. The Dow Jones Industrial Average also closing higher, up by nearly 0.7%. As for the NYSE Composite Index, we are looking at a session gain of 0.3%, and the Russell 2000 Index up by 0.4%. Joining us now is Joe Hilston, Vice President of Nassau Street Partners. Joe, great to have you here. Thank you so much for joining me.
Thank you for having me.
Well, it's been quite the volatile week this week. We saw a sell-off on Monday and a two-session recovery. So what do you make of the market action so far in 2026?
I think we're in a state of normalization. We're not seeing systematic expansion, but we're also not in a crisis. Ultimately, our specialism is in private markets, and we of course look to the public markets for influence, but I think there's a general sentiment going around that once in a while we may be in a position where we see a bit of ferocity, if you like, but I think it's just a period and I think it will pass.
And of course, in today's trading session, all eyes are on NVIDIA, and we are moments away from that key earnings report. So what are your expectations, especially given some of the disruption we've seen in AI?
I think people will have their doubts about market value. Ultimately, we're in a position now where AI is a long-term investment. I don't think anyone's going to dispute that. It's now a position of who's going to capitalise and who's going to be there first. It's more so being in a position where investments now, they have to be leading towards cost efficiency, pricing power, agility. It's no longer about generative AI, and I think people are quick to judge something, but one print doesn't mean an entire market is going to change.
And another thing I do want to ask you about is the State of the Union. So we're coming off that, and we saw a lot of opinions. So what did you make of this speech?
I try not to think too deeply. I think if you dive too deeply into specific speeches, you're going to overcomplicate everything and find yourself in a position where you don't actually know where to look and how to operate. Ultimately, when we examine opportunities in the market, it's about seeing transactions that are taking place now. It's not about speeches or sentiment. It's actually seeing where capital is deploying and how it's being invested.
So that is my next question. Where are you seeing capital actually being deployed and separating a lot of the noise from the signal? Give us your take.
Ultimately, it's no longer a question of, let's take AI for example, it's no longer a question of is it there. Investors, they want to see that it's something that's going to bear fruit. I think perhaps being a bit too transparent, people are quick to see AI and jump on a train, whereas in reality, people aren't looking for point tooling solutions anymore. They're looking for something that embeds across a platform and has horizontal and vertical integration. And so for the businesses that are able to identify that, that's where the success is going to come from. The companies that go out to market when they raise capital, and they're very efficient, they're well positioned, they know what they're looking for. It's more about prioritizing investor alignment than it is chasing liquidity and valuations.
And Joe, finally, before I let you go, tell us where you see the smart money flowing right now.
In honesty, I was having a conversation with a family office yesterday, and I think it's agentic AI. Agentic AI is going to be the future. It is how things are going to be moving, and I think it's about identifying propositions within the market that align with that sentiment.
Okay, Joe, well, thank you so much for joining us, especially on a very busy day.
Thank you so much.
Thank you. And that was Joe Hilston, Vice President at Nassau Partners. Well, happy second birthday to the current gold bull market. This year, gold has surged to record levels, clearing 5,500. I recently sat down with World Gold Council's Joe Capitone to get the lowdown on the precious metal. Take a look. Joining me here at the New York Stock Exchange is Joe Capitone, Senior Market Strategist and Head of Public Policy for the U.S. at the World Gold Council. Joe, great to have you here. Thank you so much for joining me.
Great to be back. Good to see you.
Well, when we hone in on gold within the precious metals market, we are looking at it shining brightly. So tell us what you think is behind the gains and why these all-time record highs.
So 2025 and heading into 2026 have seen prices that we've never seen. Just to put it into context, in January, we saw 12 out of 20 trading days hit record highs. That was probably a little bit more accelerated than we were comfortable and often see. But what's behind it is pretty simple. Risk and uncertainties on the minds of every investor and questions around economic future of not only the U.S., but just sovereign nations, their ability to sustain debt and support fiat currencies. So you're seeing investors and you're seeing central banks, as you've mentioned, really taking a look at how do I diversify, how do I manage risk, and how do I hedge portfolios where I'm chasing return, but needing certainty in my portfolio. And that's really been giving the Eastern investor and the Western investor a lot of motivation to have gold in their portfolio.
Yeah, so I do want you to break this down. When it comes to central bank buying of gold, what is different now compared to previous years?
So where we have seen a significant difference, now we've been on a 16-year trend of net buying by central banks, but the big difference has been the pace with which they've been choosing to pick up gold as a component of official reserves in their portfolio. We've seen near record or record level flows of 1,000 tons over the last 3 years. 2025, we saw a little bit of a slowdown in that, but that's been met with these higher prices. So the speed with which they're accumulating has slowed a bit. The big difference here is that pace and the viable alternative they have to dollar and dollar-based assets. So we're not saying that we're seeing this aggressive unwind of those assets. They're just looking to complement them. And again, with risk in mind, not only internationally and globally for trade purposes, but also onshore when they look at their own concerns around inflation, supporting their own fiat currencies. That's what's really different this time. Big moves, emerging market central banks making the move into gold.
And Joe, I do want you to expand on the role of currencies here. It's hard to believe that we're only in month 2 of 2026, given all that has happened so far on the fundamental and the macro front. But given where the U.S. currency is now, how do you see this affecting gold?
So people are looking at the dollar often as that harbor for safety, but also a gauge of economic development and strength or weakness of U.S. economy. And they're looking at it as a signal, one of many signals that are moving the gold price. And I think they're looking at it in the context of saying, do I have the appropriate way to run my portfolio? Is it set up in the right way? Am I getting the yields I need? Am I getting the returns I need? And what am I going to see and how am I going to feel if things starting to weaken? And I also think that this is a big discussion we're leading to around the value of fiat currencies. Can the debt levels that are outstanding be sustained by these countries? Not only the US, but other countries. And is it viable, or are we going to see a weakening in those overall currencies simply because of that natural fiat currency devaluation and inflationary targets?
And speaking of which, Joe, of course, we're paying attention to what's happening around the globe, not just in terms of geopolitics, but when we're thinking about central bank buying as well as seasonality. The Lunar New Year is here. And so I do want to get your take on what's happening in China and gold. What's the relationship right now?
So China, for us, we see that as one of the most significant markets for gold. They're traditionally one of the largest markets for consumer gold in the form of jewelry, but increasingly so in the form of investment. We've seen more flows into Asian ETFs this year than we've seen into the Americas, which is a big surprise, but exciting. China's leading the pack. They have a growing and sophisticated investment market, which includes insurance companies piloting gold in their portfolios, but also retail investors and consumers buying gold, not only in the traditional formats, but in the format of financial instruments. So it's a growing market. But when the Lunar New Year comes around, we often see price support wane a little bit. It's such a significant mover and an impact on the price. You just have to be aware of it. Not a problem, just something to be aware of.
Thank you so much for joining us as we kick off Q1.
Thanks for having me.
Thank you. And now the time for a few fintech, crypto, and AI headlines. First, the crypto majors of Bitcoin, ETH, and Solana all up more than 8% today. Bitcoin eyeing 70,000 for its biggest intraday gain since February 6th. Now, crypto snapping a 3-day losing streak as overall risk sentiment improves. And next up, Meta is piloting stablecoin payments across its apps using existing digital tokens rather than creating its own coin, as stablecoin volumes top $300 billion and new Fed rules clear a path for broader adoption. And finally, Circle stock rallying on earnings, up a staggering 33% today. The stablecoin issuer reported a 77% revenue surge and stronger than expected profit, and that came on a 72% jump in USDC circulation. Joining us now is Nick Roberts-Huntley, founder and CEO of Blueprint Finance. Nick, great to have you here. Thank you so much for joining me.
Of course, Remy. Thanks for having me.
Well, first and foremost, let's talk about the price action we're seeing across the crypto space, in particular the crypto majors. What do you make of what we saw today?
I mean, it's a fantastic reprieve from the last few weeks. It's been a pretty bloody market for a while. The next piece for us is really, why has that happened? I think we've seen a question mark about where the bid has come from. There's obviously some wonderful institutional adoption. We're seeing meaningful investments in human resources beyond just buying ETFs from major investment professionals. That's a bullish sign for me on a longer view, which I think builds trust and confidence in those major assets.
And of course, stablecoins are in the spotlight today, especially on the heels of Circle's earnings. But of course, we have to keep in mind that there's adoption happening when it comes to stablecoins. So what do you think is happening, and what can we expect on the horizon?
I think we're starting to get a higher bit of confidence in the regulatory framework for how stables could be adopted and used more broadly across multiple industries. I think AI payments and micropayments are a huge tailwind that could push this forward as well over the next 12 months. Broadly speaking, we're starting to get real cogent arguments for why these things can be used in broader markets and everyday life, rather than being a slightly more obscure kind of crypto-obsessed market tool.
And you mentioned regulation. We can't separate what's happening here on Wall Street without talking about the nation's capital. So when it comes to the regulatory landscape, what can we actually expect when it comes to timeline?
My bet is something before the summer. It gives us real strong clarity in how these are going to be treated, both from an investment class, but also how people can get broader access to them within everyday life, whether that's in credit cards, payment structures, and or kind of trading facilities between major investment firms.
Yeah, and Nick, of course, given the drawdown we saw in the crypto majors, not just in the beginning of February, but also in October, where do we go from now, and what are some inflection points that you're looking at?
I think it's going to be interesting to find out whether this recent loss of price has been finally found its fair value bid, and these are people buying on a longer horizon, or this is a fundamentally new attitude towards the asset class having more utility. I think that'll reveal itself if this is sustained pressure into the market over the next month. But as always in this market, it's moving quickly, things are moving fast, and we'll have to just move quickly with it.
Yeah, and finally, Nick, before I let you go, what are the few things that you're watching when it comes to the digital asset space? Because I know you speak to many stakeholders.
I think we're really excited about the DATs that were raised last year starting to find their way on chain. I think we're obviously always keeping an keen eye on regulation, but I think also a lot of the M&A activity that's happening in the market right now. That's a really strong tailwind for us looking forward, and for us, particularly on the institutional adoption, we're right in the thick of it.
Well, Nick, it's always great talking to you. Thank you so much for joining us. That was Nick Roberts-Huntley, founder and CEO of Blueprint Finance. Don't go anywhere. Much more taking stock after this quick break. Welcome back to Taking Stock. I am now joined by Chris Berner, Board Chair and CEO of Bristol Myers Squibb. Chris, good evening. Great to have you here, and congratulations on the bell.
Thank you so much. It's fantastic to be here.
Well, first and foremost, BMS has been listed on the New York Stock Exchange for nearly a century, so that is quite the success story. So tell me about the strategy.
Well, listen, our strategy continues to be similar to what it was through our entire history as a company. Over those years, we've tackled some of the hardest problems in science. Right now, we have a fantastic pipeline of new medicines that we'll be launching over the next 18 to 24 months. We're focused on bringing that to market, continuing to deliver on the portfolio we have today, and of course, continuing to find new science to bring in to help transform the lives of patients.
And Chris, of course, I do want to hear about your pipeline, so tell us what's in store.
Well, we have probably the richest pipeline we have ever had in the history of the company, certainly in my 11 years. Over the next 18 to 24 months, we have the potential for multiple data readouts between now and the end of the decade. We have the potential to deliver 10 new medicines and over 30 meaningful launch opportunities. Added up, that gives us a lot of opportunity to not only continue to deliver for patients today, but transform the lives of patients across therapeutic areas for the remainder of the decade, and exit this decade as one of the fastest growing companies in the sector.
And speaking of decade, there are all eyes on artificial intelligence. So tell us what's going on with AI and BMS.
Well, AI is going to transform, in our view, every single sector of this industry, and frankly, we're looking at it as transforming the entire value chain. Everything from basic discovery to how we deliver our medicines to patients. We're making significant investments across the value chain, and let me give you one illustration of the impact that it can have. The single biggest period of developing a new medicine is the time from when a medicine enters the patient in phase 1 all the way to approval. We have the potential to use AI to reduce that by upwards of 30%. So we're setting very bold ambitions with this technology. We're making investments, and we think it's going to transform how we operate.
And speaking of which, as you look beyond the next decade and possibly the next 100 years, of course you're looking at the domestic innovation ecosystem.
Sure.
So give us an understanding of what we can expect.
Well, we are fortunate in the United States to have the best ecosystem for biopharmaceuticals writ large. And our focus as a company, being at the epicenter of that, is to continue to strengthen that ecosystem. And so we continue to engage with the government in the US, both sides of the aisle, and certainly with the administration, to strengthen that ecosystem to enable us to continue to deliver on our mission for patients.
And of course, as we kick off the new year, all eyes have been on leadership. So as the CEO, what are your priorities heading into 2026?
Well, right now, we have a very strong company, and our mission as a leadership team is to continue to strengthen it. We've got a young portfolio of differentiated products today. They're growing nicely with good momentum out of 2025. We've got, as I said, the strongest pipeline that we've certainly had in my 10 years, 11 years at the company. We're in a very strong financial position, and our focus is to continue to deliver day in and day out for our patients.
And finally, you just rang the closing bell here at the New York Stock Exchange. So do you have a message for investors out there?
Well, the history of this company is storied. We've been around for over 160 years. We've been part of the exchange for almost a century, and the future is bright. We're strong today, we're getting stronger, and our focus is to continue to do what we've done so well in that history, bring really, really innovative medicines, transform the lives of patients, and do that with speed.
Well, Chris, great talking to you today. Thank you so much for joining us, and congratulations on the closing bell.
Thank you, it's my pleasure.
Thank you so much. Much more Taking Stock after the break. Don't go away.
Hey, I'm Scarlett Seaworth Money 2020, and welcome to how fintech companies actually make money. Today's spotlight, SoFi, the fintech that started by tackling student loan stress and ended up buying naming rights to an NFL stadium. Okay, SoFi's story is a masterclass in fintech glow up. From refinancing debt to building a full stack financial ecosystem, they've done it all. Here's how they make money. Remember refinancing your student loans? Paperwork, phone calls, it is a lot. It's not fun. SoFi said, what if we make this less depressing and make money? Here we go. 2011, San Francisco. A group of Stanford grads launched SoFi to help students refinance their loans. VCs are swooning. Millennials, that's me, cheer. Yes, we got to refinance those loans. And then SoFi goes full glow up. Mortgages, investing, insurance, banking. They even bought a stadium because why not? I want a stadium. Here's how SoFi makes money. Lending, student loans, personal loans, mortgages. SoFi earns interest and origination fees. Banking products, checking and savings accounts with interchange revenue from SoFi debit cards. Investing, SoFi Invest offers stocks, ETFs, and crypto. They monetize through payment for order flow and margin lending. The tech platform, SoFi owns Galileo, the API backbone for other fintechs. SaaS revenue all day, baby. And then the membership model. SoFi sells the dream of financial wellness, cross-selling products to keep you in their ecosystem. Bundle it up all day, every day. SoFi started as a loan refi shop. Now it's a full-stack digital bank with a side hustle and tech infrastructure. It's giving fintech main character energy, I'd say. SoFi's playbook is quite simple. Own the relationship, then layer on products until you're not just a lender, you're their entire financial life. From student debt to stadium lights, SoFi turned financial stress into financial flex. Flexing over here all day, every day. Back over to you.
Welcome back. Today in Startups Raises and Rounds, Bloomberg reporting Elon Musk, SpaceX is eyeing a June IPO that could raise up to $50 billion, a blockbuster deal that may dominate investor attention and force smaller companies to perhaps rethink their own 2026 listing timelines. And next up, Defense Secretary Pete Hegseth is giving Anthropic a Friday deadline to roll back certain Claude guardrails or risk losing its $200 million Pentagon contract, but the company says it will not budge on limits around autonomous weapons and mass surveillance. And finally, Bloomberg reporting Stripe is weighing in acquisition of all or parts of PayPal in early stage talks that could shake up the digital payments landscape, this as PayPal struggles to regain growth. And now Cheddar's Chris Castellino has the latest in auto tech from CES 2026 in Vegas.
Fresh off the line is the all-new Afeela One from Sony Honda Mobility. Sony and Honda have joined forces to create what they call a creative entertainment space on four wheels. This isn't just an electric vehicle. It's a rolling concert hall, gaming lounge, and AI-powered assistant, all wrapped in a sleek design.
This is the Afeela One. This is our first model, and it comes in two trims, the Signature and the Origin. We just started taking reservations last year for delivery later this year out of our plant in Ohio.
The goal, Sony Honda says, is to completely redefine the relationship between people and mobility. And that starts with 40 sensors packed into every inch of this car, including LiDAR, 18 cameras, 12 ultrasonics, and 9 radar units, all powered by high-performance AI chip maker Qualcomm.
This actually allows the car to perform at a L2 plus ADAS, which is essentially self-driving, relieving you, the driver, of the burden. And so with one touch, you can have an end-to-end journey, and we call this Afeela Intelligent Drive.
But it's what happens inside the cabin that truly sets the Afeela apart. This car doesn't just drive you, it gets to know you. Meet the Afeela Personal Agent, powered by Microsoft's Azure OpenAI.
This is designed to be not just a one-way assistant that you tell what to do. It also interacts with you. It learns your customs and preferences. It can see you in the cameras in the car.
Hey David, nice dark jacket looks sharp for a morning in Vegas. And I see you've got some company snapping pics. Are you ready to dive into the Afeela experience or just enjoying the vibe for now?
We're enjoying the vibe, but I'm also kind of hungry. Are there any good burger joints around here?
Here are 3 hamburger restaurants near you.
The AI noticed the driver, complimented his outfit, and responded conversationally to a casual request, all without saying, "Hey Siri," or "Okay Google."
So let's say you're watching a movie in the car with your passenger while you're charging the vehicle. You can have it center screen. It can also be synced to the screens in the back. You can move it over here to the side if you need to, say, look at your navigation here. But then when you're driving, a privacy filter will engage so that the driver cannot see what's over here, keeping them from distractions and keeping you safe on the road. The analog mirrors are there because of legal reasons, but the cameras allow you to have a wider range of view.
And for gamers, the Afeela comes with PlayStation Remote Play built right into the rear entertainment screens.
So if you have a PlayStation 5 or 4 at home that's connected to the internet, you can play your games inside your Afeela.
Then there's the sound system. 28 speakers positioned throughout the vehicle, including subs under the console and speakers in the headrests.
Most car manufacturers build the car and then put in the speakers. In this, it was reversed. They designed the speaker system with the subs in the middle so that the bass is centered. That way you get a more robust, resilient, and entertaining audio experience.
This high-tech electric sedan is also capable of a top speed of 146 miles per hour, with an estimated EPA range of up to 300 miles. The future of mobility isn't simply about getting from point A to point B anymore. Car makers are now focused on scaling autonomous, intelligent, and conversational technology. Are you ready for the ride? For Cheddar, I'm Chris Castellino.
Well, recapping today's market action, we are looking at the major U.S. stock averages in positive territory. The Dow Jones Industrial Average gaining by over 300 points, up by 0.6%, while the S&P 500 also soaring by 0.8% and posting back-to-back gains. But this does come on the heels of Monday's sell-off. As for the major crypto averages, we are looking at Bitcoin up by 8%, ETH up by 12%, and Sol up by 13.5%. Well, of course, we are awaiting NVIDIA earnings, and we will be bringing them to you tomorrow. Catch me on Market Movers before the opening bell.